Hello and welcome to KLM Institute.
Today, we're diving deep into one of the most significant and anticipated updates to India's taxation system, the Direct Tax Code 2025 (DTC). The Indian government is set to introduce a complete overhaul of the existing tax framework, which will impact individuals, businesses, and the taxation process across the country. This reform promises to simplify tax filing, enhance compliance, and boost India's economic health. In this comprehensive guide, we'll break down everything you need to know about the Direct Tax Code 2025, how it will affect you, and what changes are on the horizon. Why is the Direct Tax Code 2025 being introduced? For many years, India's tax system has been plagued with complexity. The Income Tax Act of 1961, though repeatedly amended, still consists of numerous provisions, exemptions, and deductions that have created confusion for taxpayers. This has led to a situation where only about 2% of India's population pays income tax, a sharp contrast to more developed nations with higher tax compliance rates. The primary reason for the Direct Tax Code (DTC) is to tackle this issue. The government wants to increase the number of taxpayers and make the entire tax system more transparent, simple, and user-friendly. By doing so, the government hopes to expand the tax base, simplify compliance, and ultimately enhance revenue collection, which can be used to fund national development initiatives.
Honestly say, we should look at simpler ways of talking and communicating with our assessees. Also, grievance redressal is a major issue. Only after the taxpayers have realized that there is ease and flexibility and simplicity which is being offered, like in the new tax regime, people are willing to come on board and comply. That within 6 months, we will have the tax code or the Income Tax Act, at least some parts of it very clearly, written in simple, easy to understand language. There is a committee within the CBDT which is working on it, and I'm happy to say the lines and the 3 goals which the Honorable Prime Minister had mentioned, seamless, painless, and faceless, will be kept in mind even as we are working on it.
Key features of the Direct Tax Code 2025. The Direct Tax Code 2025 seeks to overhaul India's tax laws with major reforms that will benefit individuals, businesses, and the government. Here are some of the key features of the proposed changes. 1. Simplified tax classifications. One of the biggest sources of confusion in India's current tax system is the complex categorization of residents under the Income Tax Act. The Act currently distinguishes between resident, resident but not ordinary resident, and non-resident taxpayers. This has often led to confusion about the taxability of income, especially for people with non-resident status or foreign income. The DTC aims to eliminate this complexity by simplifying the classification system. The new tax code will only differentiate between resident and non-resident individuals. This will help make the tax rules clearer and more understandable for taxpayers, especially those living abroad or earning foreign income. 2. Streamlined tax regimes and fewer slabs. The Direct Tax Code 2025 is expected to introduce a simplified tax regime that will reduce the number of tax slabs and make the process of tax calculation much easier for individuals and businesses. This streamlining will benefit the middle class, particularly those with incomes ranging from 5 lakh rupees to 15 lakh rupees. Currently, the income tax system in India has multiple tax slabs, with complex exemptions and deductions available. Under the new code, experts predict that the government will offer lower tax rates, fewer slabs, and simplified filing procedures, which will likely reduce the overall tax burden for most middle-income earners. 3. Consolidation of financial year and assessment year. Currently, India operates under a dual-year system, the financial year and the assessment year. This system causes significant confusion, especially when it comes to filing returns. Under the Direct Tax Code, the government plans to consolidate these two terms, making it simpler for taxpayers to understand the filing process and avoid mistakes. This change will reduce confusion, ensuring that taxpayers file their returns accurately and on time. 4. Unified tax rates for businesses. For businesses, particularly multinational corporations, the Direct Tax Code will bring a unified tax rate for both domestic and international businesses. This change is crucial as India has a rapidly growing economy, and the current tax framework for multinational companies can be complicated. With a single, simplified tax rate applicable to both domestic and international companies, tax calculations will be clearer, reducing compliance challenges for businesses operating in multiple jurisdictions. 5. Reduction in compliance burdens. Currently, businesses and individuals face a multitude of deadlines for tax filings, TDS returns, tax audits, and more. Missing any of these deadlines can result in significant penalties. The Direct Tax Code aims to streamline this process by reducing the number of deadlines and simplifying filing requirements. This will help individuals and businesses stay compliant without feeling overwhelmed by administrative burdens. The goal is to make compliance less time-consuming and more straightforward. 6. Impact on individuals earning 5 lakh rupees to 15 lakh rupees. Experts predict that individuals in the 5 lakh rupees to 15 lakh rupees income bracket will be the biggest beneficiaries of the Direct Tax Code 2025. Under the new code, these individuals will experience simplified tax regimes, reduced tax slabs, and potentially lower tax rates. This means that many middle-class taxpayers may see lower tax liabilities, making it easier for them to save and invest more of their earnings. 7. Phasing out the old tax regime. While the new tax code promises a simpler, more efficient system, it's expected that the government will gradually phase out the old tax regime. Initially, taxpayers will have the option to choose between the old and new systems. However, in the coming years, the government plans to remove the flexibility to choose between the old and new tax systems, making the DTC the standard framework. What does this mean for students? If you're a student planning to sit for taxation exams in 2025, you'll need to continue studying the old income tax syllabus. However, if you're preparing for exams from 2026 onward, you will need to study the Direct Tax Code syllabus. It's crucial to stay updated on any syllabus changes, so you can adjust your preparation accordingly. Expectations from experts. Benefits of the Direct Tax Code. According to experts, the Direct Tax Code 2025 will revolutionize India's tax system by making it simpler, fairer, and more transparent. The tax code's main objective is to ease the burden of compliance, especially for middle-class taxpayers. By introducing streamlined tax regimes, fewer slabs, and lower rates, the DTC is expected to benefit individuals earning between 5 lakh rupees and 15 lakh rupees the most. Key provisions that are expected to benefit taxpayers include rationalized tax rates and structures, clarity in residential status with just 2 categories, resident and non-resident, fewer compliance deadlines, allowing taxpayers to stay on track without the fear of missing crucial dates. Impact on the Indian economy. The Direct Tax Code 2025 is designed not just to simplify taxes for individuals and businesses but also to bolster India's economic growth. By increasing tax compliance, the government expects to boost revenue collections, which can then be used to fund critical infrastructure projects, social programs, and other national development initiatives. What's next for the Direct Tax Code? The Direct Tax Code 2025 is expected to be officially unveiled in the Union Budget of 2025, which will be presented on February 1, 2025. This will mark the official transition from the old system to the new code, though it will be a gradual change over time. The government has assured taxpayers that the transition will be smooth and that there will be ample support for businesses and individuals to adapt. Difference between the Income Tax Act and Direct Tax Code (DTC). As the government moves towards implementing the Direct Tax Code, it's important to understand the difference between the Income Tax Act of 1961 and the Direct Tax Code 2025. Below are some of the key differences. 1. Financial year, previous year, assessment year. In the Income Tax Act, there are two concepts: previous year and assessment year. However, in the Direct Tax Code, the system is simplified to only include the financial year. 2. Residential status. Under the Income Tax Act, there are three categories of residential status: resident, non-resident, non-ordinarily resident. However, in the Direct Tax Code, the classification is simplified to just two categories: resident and non-resident. 3. Simplification. The Direct Tax Code is designed to be much simpler than the Income Tax Act. The Income Tax Act is complex, with multiple provisions and explanations, while the DTC eliminates unnecessary complexities, providing a straightforward framework for taxpayers. 4. Provision for tax audit. In the Income Tax Act, only chartered accountants (CAs) can conduct tax audits. In contrast, the Direct Tax Code allows chartered accountants, company secretaries (CSs), and cost accountants to conduct tax audits. 5. Treatment of distributed income. Under the Income Tax Act, distributed income, e.g., from LIC or mutual funds, is exempt from taxation. However, the Direct Tax Code imposes a 5% tax on distributed income, which brings more clarity to its taxation. 6. Tax on income above Rs. 10 crore. Under the Income Tax Act, income exceeding 10 crore rupees is taxed at 30% plus a surcharge of 15%. However, under the Direct Tax Code (DTC), income exceeding 10 crore rupees will be taxed at a higher rate of 35%. This higher tax rate is intended to impose a more significant tax burden on the ultra-wealthy, helping redistribute wealth and contribute to national revenue in a more progressive manner. 7. Taxation on dividends. In the Income Tax Act, dividends are subject to dividend distribution tax (DDT) at 15%, which is paid by the company distributing the dividends. In contrast, under the Direct Tax Code, dividends are taxed at 15% without the dividend distribution tax (DDT). This shift will impact both companies and shareholders, simplifying the taxation process on dividends while ensuring that dividends are taxed in the hands of the recipient, rather than at the corporate level. 8. Income tax versus Direct Tax Code on income sources. Under the Income Tax Act, income is primarily taxed from ordinary sources, such as salary, business profits, capital gains, and property income. On the other hand, the Direct Tax Code introduces the concept of special and ordinary sources of income. The new code will categorize income into more distinct sources such as employment income, house property income, business income, capital gains, and income from residuary sources, allowing for clearer classification and taxation of different income types. 9. Definition of assessee. The Income Tax Act defines an assessee, a person subject to tax, broadly as anyone who is liable to pay tax, receive a refund, or has filed a tax return voluntarily. The Direct Tax Code, however, further refines this definition to include a taxpayer or someone liable for proceedings under the Act, individuals entitled to a refund, those who voluntarily file returns, even if they don't owe any taxes. Anyone subject to proceedings are liable under the Act, expanding its scope and improving clarity. Other key differences between Income Tax Act and Direct Tax Code. Simplification of tax structure. The Income Tax Act is known for its complexity with numerous sections, provisions, and explanations, which often create confusion. The Direct Tax Code, on the other hand, has been designed to be much simpler, with clearer and fewer provisions to improve transparency and ease of understanding. Tax compliance. The Direct Tax Code aims to significantly reduce the compliance burden for both individuals and businesses. It will eliminate multiple deadlines and reduce the paperwork, helping businesses and taxpayers adhere to tax norms without facing unnecessary penalties. Tax audit process. While the Income Tax Act restricts tax audits to chartered accountants (CAs), the Direct Tax Code expands this role to include company secretaries (CSs) and cost accountants. This is designed to make tax audits more accessible and flexible, allowing more professionals to perform these audits. New era in taxation for India. The Direct Tax Code 2025 is a landmark reform that promises to reshape the taxation landscape in India. By simplifying the tax structure, reducing the number of tax slabs, eliminating confusing terminologies, and making tax filing more transparent and efficient, the DTC is set to benefit individual taxpayers, businesses, and the economy as a whole. Some of the key benefits include simplified tax classifications for residents and non-residents, reduced compliance burdens with fewer deadlines, lower tax rates for middle-income earners, especially those earning between 5 lakh rupees and 15 lakh rupees, unified tax rates for domestic and international businesses, making it easier for companies to operate in India. The Direct Tax Code 2025 aims to create a fairer, more efficient tax system that will encourage higher tax compliance, thus improving the government's ability to fund public services and infrastructure projects. Additionally, by eliminating unnecessary complexities, it makes India's tax system more accessible, particularly for those who were previously discouraged by the complexities of the Income Tax Act. As we approach the Union Budget of 2025, expect further clarifications and details about the implementation of the Direct Tax Code. The government has assured that the transition will be gradual, allowing taxpayers sufficient time to adjust to the new system. At KLM Institute, we will continue to keep you updated on any developments related to the Direct Tax Code 2025, so stay tuned for more information. Don't forget to share this article with friends and family who might find it helpful. Now let's talk about the challenges. India's Direct Tax Code 2025. Key challenges and solutions in implementing the tax reform. India is on the brink of one of its most significant tax reforms, the Direct Tax Code (DTC) 2025. Slated to replace the Income Tax Act of 1961, the DTC promises to simplify the country's tax system, improve tax compliance, and create a more transparent framework. However, as with any major reform, the transition to the DTC will not be without its challenges. In this article, we explore the key obstacles India might face in implementing the Direct Tax Code 2025 and the solutions that can help smoothen the transition. 1. Transition from the Income Tax Act to the DTC, a shift in paradigm. The challenge. For over 6 decades, India's tax system has been governed by the Income Tax Act of 1961. The transition to a new, simplified tax regime under the DTC is a monumental shift. Many taxpayers, particularly those who are less tech-savvy or unfamiliar with regulatory changes, might find it difficult to adapt to the new framework. This sudden overhaul could lead to confusion, resistance, and even errors in tax filing, especially in the early stages. The solution. To facilitate a smooth transition, the government will need to provide extensive training for taxpayers, businesses, and tax professionals. Offering online tutorials, webinars, and step-by-step guides can ensure that individuals and businesses understand the new rules. A gradual phase-out of the old tax regime, coupled with a unified system for financial and assessment years, will also help reduce confusion. 2. Implementation and infrastructure challenges. A digital overhaul. The challenge. The Direct Tax Code requires a complete overhaul of India's tax administration, including updated IT infrastructure and new systems for filing returns. Outdated systems, lack of proper training for tax officers, and resistance to change may cause delays in the processing of returns and tax payments. The solution. The government must invest in upgrading tax software and ensure that tax officers are well trained in using these new systems. Phased implementation across states will help to address potential regional discrepancies, ensuring a smooth transition. Support centers and dedicated helplines can guide businesses and individuals through the initial phase of the rollout. 3. Changes in tax slabs and rates. The wealthy take a hit. The challenge. One of the most talked about features of the DTC 2025 is the revised tax structure, which simplifies the tax slabs and introduces a higher rate of 35% for those earning more than 10 crore rupees. While this is expected to generate more revenue from the ultra-wealthy, it may lead to dissatisfaction and pushback from high-income groups and businesses. The solution. To mitigate the potential backlash, the government should conduct public awareness campaigns explaining the rationale behind these changes, emphasizing that they aim to create a more equitable tax system. Additionally, offering tax incentives for investment and business growth could help offset the higher taxes for ultra-wealthy individuals and large corporations. 4. Corporate tax compliance and international alignment. A global perspective. The challenge. The DTC aims to streamline corporate tax rates, but multinational corporations could face challenges in aligning with global tax standards. With tax systems across countries constantly evolving, adjusting to India's unified tax rate might add complexity to their operations, especially those with international operations. The solution. India needs to ensure that its tax policies align with global standards, particularly those set by the OECD. Continuous consultation with global organizations and industry leaders will be key to ensuring that businesses can adapt without undue burden. A simplified tax code will help foreign investors and multinational companies adjust more easily to the new system. 5. Impact on tax professionals. A shift in roles. The challenge. As the DTC simplifies the tax system, some tax professionals specializing in the Income Tax Act may find their roles shifting. There's a possibility of job displacement, where professionals may need to upskill to understand the nuances of the new tax framework. The solution. To help tax professionals adjust, the government can collaborate with educational institutions to offer upskilling programs. Regular workshops and online certifications can provide professionals with the knowledge and tools they need to stay relevant in the changing landscape. By expanding the scope of tax audits to include company secretaries and cost accountants, India can also tap into a wider pool of tax experts. 6. New provisions on tax audits and distributed income, streamlining the process. The challenge. The DTC introduces new provisions, such as allowing company secretaries and cost accountants to conduct tax audits, as well as a 5% tax on distributed income. These changes may initially confuse businesses that are used to the old system, requiring additional time and resources to adapt. The solution. To minimize confusion, the government must ensure that clear guidelines are issued for tax audits and the taxation of distributed income. Communication campaigns targeting both businesses and tax professionals will help everyone understand these new provisions and their responsibilities. 7. Increased scrutiny and audits for high-income earners, a concern for the wealthy. The challenge. The DTC introduces stricter tax rates for those with income exceeding 10 crore rupees, which might result in increased audits and scrutiny for high-income earners. This could lead to disputes, administrative delays, and a potential backlog in audit cases. The solution. The government needs to train tax officers to effectively handle high-income tax cases and ensure transparency. A robust audit system with clear guidelines will prevent misuse of power and unnecessary delays. Automation in audits can also streamline the process, making it more efficient. 8. Compliance burden for small businesses, a potential hurdle. The challenge. While the DTC aims to reduce compliance burdens for larger corporations, small businesses might still face difficulties due to limited resources, especially if they lack the knowledge to navigate the new regulations. The solution. To support small businesses, the government can introduce simplified tax structures or special exemptions. Workshops, free tax filing software, and affordable consulting services can help small businesses stay compliant without overwhelming them with complex rules. 9. Taxation on dividends. Changing the rules. The challenge. The removal of dividend distribution tax (DDT) and the shift to taxing dividends in the hands of the recipients may cause confusion, especially among foreign investors who are used to DDT being levied at the corporate level. The solution. To ensure smooth implementation, the government should offer a clear and simple explanation of the new dividend taxation system. Additionally, providing dedicated support for foreign investors can ease their concerns and help them comply with the new rules. 10. Lack of awareness and understanding. Bridging the knowledge gap. The challenge. Despite the government's best efforts, many taxpayers may struggle to understand the complexities of the DTC. The sweeping changes could lead to confusion, particularly for individuals who rely on tax professionals for advice. The solution. Comprehensive public awareness campaigns should be launched to educate the public about the key provisions of the Direct Tax Code 2025. Interactive online tools, webinars, and easy-to-understand resources will help taxpayers understand the nuances of the new tax code and ensure better compliance. The road ahead for the Direct Tax Code 2025. The Direct Tax Code 2025 is undoubtedly a groundbreaking reform that promises to simplify India's complex tax system. However, as we've seen, it faces a number of challenges in terms of implementation, understanding, and compliance. For the reform to succeed, the government must take proactive measures, including providing robust support to taxpayers, ensuring transparency, and facilitating education and training for businesses, professionals, and citizens alike. By addressing these challenges head-on and ensuring a smooth transition, India can create a tax system that is not only simpler but also more equitable, fostering higher compliance and boosting the country's economic growth.
Second tax regime, the new regime as we would call, the alternative regime as we've called, even as the first one continues still today. And that showcased how a transparent, simple, easy to comply system could be brought. Otherwise, today, within 2 years of bringing it in, we wouldn't have had 72% of all the taxpayers moving to the new system. So last year, there was a lot of hesitation, and people wondered, is it attractive enough? Is it good enough? Is it simple enough? Are people actually moving? Today, I'm speaking in front of the media as much as I'm speaking in front of you. Media constantly kept asking us, do you think the second system is being welcomed? Are people willing to move to it? Is it simple enough? Today, the numbers speak for themselves. 72% moving from the old system to this very clearly shows that this has been now accepted as a very well thought through system, wherein the rates are simple, there are no exemptions, no compliance headaches, and therefore has become very attractive. For those who look at income tax from outside, who think why can't the old system also, old regime also, get the same benefits as the new one? I would like to upfront say that in the process of moving towards a simpler and a easy to comply system, which will be bereft of all the complications of exemptions and so on, we came with this alternative system and underlined the fact that it shall only be an option, it's a choice. We are not compelling people to move from the old to the new. When they think it is going to benefit them to move, they would automatically do. So we gave them the option to move, and if they did find it not so convenient, they would even have the option to go back. With all these kind of flexibilities, India's direct taxation is very clearly understanding the requirement of the people and giving them a flexible way of transitioning towards a simpler, easier, and easy to comply system. So the transition is more on the principle of nudge rather than this is it, you take it, or else I'm sorry, you have to comply and there's no alternative. That's not the approach our government has taken. Prime Minister Modi has been very clear from the beginning that we need to provide simpler system. We need to make it easy to comply. We also have to continuously show reduction in the rate, so that once that kind of a reduction in the rate and simpler system comes in place, the tax net would widen because people will understand that it is easier to comply, beneficial to comply, and simpler to comply, and therefore they would move. That theory is now proving to become correct because you see the way people are moving out of the old regime to the new.
Stay tuned for more updates and insights on the Direct Tax Code 2025 as we approach its official rollout in 2025.